welcome to Inside Out, a show where we focus on individual stocks with in-depth analysis, deep dive into the financials, and tell you about the key risks and triggers going forward. Hey, Nigel.
Well, hey, Sonal, and we highlight all the key metrics that Sonal just mentioned, but we also ask the questions that you want to ask. Well, let's not waste any more time and get straight to the first stock on our radar today. Sonal, what do you have for us on Deep Dive?
Okay, so Nigel, I've always been very curious about what Nazara Technologies really does. So I thought, let's get a deep dive and understand more about the business and get an insight from the management as well. Nazara Technology, first of the new age businesses to get listed 2 years back in March 2021. It saw a big surge, up 80% on the listing day, but since then there has been a one-way downtick. The company earns revenues via subscription, that is around 29% of the revenues, platform fees around 20%, ad revenues around 14%, and brand sponsorship and media rights at 37%. And in terms of the segmental breakup, esports is 50%, gamified early learning is 24%, ad tech is 14%, real money gaming is at 5%, telco subscription at 5%, and freemium is at 2%. So let's now get in the management of the company to understand more about the business as well. Nitish, thanks a lot for joining us on the show today. The first thing that I want to ask you is what your revenue stream really is. Is it completely ad revenues? Can you split it up for us? And what is the revenue mix like? And will you change it going forward?
So Nazara is, diversified by various revenue models. We cover advertising revenues, sponsor revenues, in-app purchase revenues, subscription revenues. So the way we built the company is to ensure that we have, strong diversification across a variety of revenue models. And, we keep monetizing across all these channels, depending on which monetization model is working in a particular geography. For example, subscription works really well in the US. We are able to monetize fairly well in the Indian markets today through advertising. So different revenue models work in different geographies and also in different products. But we're kind of covering the entire span of revenue models.
All right, Nitish, but what about the expenditure that the business has to make? Break it up for us. Is it in buying new IPs, new technology, or is it R&D?
See, Nazara has been, pretty active in mergers and acquisitions. And we have acquired some of the most popular gaming IPs. So we are very IP focused and very product focused. If you look at a portfolio of games that we have, Kiddopia is, a top game in the US for kids in the age of 2 to 8. We recently acquired a few months back Animal Jam, which is again a very popular IP for kids in the age of 8 to 14. So we invest our capital in acquiring IPs, which we believe can be monetized over a long period of time. And Nazara can really scale up these businesses by providing more expertise on user acquisition, on better data analytics, and better marketing. So this is our fundamental approach to the business, aggregating IPs or having ownership of IPs. So that is very important for us. So that's a capital expenditure for us. From an operational expenditure, I think one of the largest expenses you will see is user acquisition. We spend significant amount of money, acquiring users to come and experience our products, acquire access to our products. So I think that's an important expenditure that we do. But we are very careful in terms of how we approach this. We are very unit metric focused. So we only spend money acquiring users that we can afford to, and that is extremely profitable for us. We usually have a metric of 2:1. So for every, let's say, 100 rupees that we spend, we should be able to make a net of 200 rupees back within a reasonable time frame. That's largely the metric that we try and look at internally while spending money on customer acquisition.
All right, thanks for that. We'll come back to you in just a bit. But Sonal, you spoke about different segments. But what really is it that the company does in each of the segments?
Okay, it's a lot of segments, right? So let me break it down for you. In the esports segments, which is the biggest one, company earns revenues via media rights, brand sponsorships, in ads through advertisement networks, of course. In the gamified early learning, they have subscription-based fees here. In real money gaming, there's a platform fee collected from skilled games played on the platform. Freemium is where they earn it through in-app purchases and advertisements as well. Telco subscriptions is where they earn revenues from partnership with telecom operators, and AdTech, which is the third largest revenue contributor, it has fee-based revenue structure for the company. So let's take this ahead. Nitish, I spoke about a lot of segments. Which is the highest margin business for you? How often can you take price hikes in subscription-based businesses, and will it remain like that?
So our gaming IP businesses are our most profitable businesses today with higher margins. The esports business is a low margin business simply because it's growing at a very fast rate and in a space where we are market leaders. Nazara today has over 80% market share in the Indian market. So we are obviously reinvesting a lot of our margins into growth and strategic leadership. Coming back to the gaming IP businesses, whether it is within the gamified learning space or the freemium space, we have games like Kidopia, Animal Jam, World Cricket Championship, which is a fantastic franchise around cricket. These are very profitable businesses for us. Just to give you a perspective, our cricket game WCC is generating upwards of 25% EBITDA margins already. So we see these businesses as the consumer base scales, as the revenue scale, they will turn out to be even much higher margin generators for us. And we're already seeing that happen.
Okay, let's focus on esports then. How do you plan to grow it? What about margins in Nodwin businesses? They're dependent on new IPs as well as on offline businesses. What is the rate at which this is done? And what does it mean for margins?
Nazara is betting that esports is going to become the number 2 sports in our country after cricket. And at the rate viewership is growing, at the rate customer interest in this new emerging sport is growing, we are very sure that in the next 2, 3, 4 years we will achieve that very fast. And you can imagine a number 2 sport in a country like India is going to be a massive revenue generator and a massive value creator as well. Given that today we have 80% market share, it's very important that Nazara, along with our subsidiaries like Nodwin, continue to dominate this space, create entry barriers, create moats around this space. And that's exactly what we are doing. So if you see the transformation of our esports business over the last 2 years, what was events and IP, tournament IP business, we've actually put the gamer in the center and created everything around him that he may want. So whether it is esports tournaments, they can be online, they can be offline. It is esports entertainment content. We launched something called Playground, which is the big boss for gaming season 2 now in association with Rusk Media, which is doing extremely well. We have offline gaming accessories. So we have Wings, which is, the number 1 online selling accessory in its category. For gaming audio headsets. So we have mobile gaming recharges, we have publisher relations in the esports space. So we're kind of panning the entire spectrum of what a esports gamer in India would want, and we want to make sure that we are there at every touch point. I think that's what we are growing, this whole esports ecosystem. We are dominating this the esports ecosystem, and we believe this will be a very large value generator for us. As we achieve scale, this business has grown, upwards of 80% year on year in the last 9 months, if you see, reported on our Q3 numbers. And I believe that this will continue to grow very fast. At the right time, we will see, especially as media rights take off, we will see this business also become highly margin accretive. But that is not a priority in this business. Strategic market leadership in the esports space for Nazara is number 1 priority today.
All right, we got that, but you didn't mention the margins in Nodwin business.
So it's low single-digit margins at this point of time, and like I said, it's a conscious approach and decision we have taken. The basic decision is let us grow our esports, revenues and strategic leadership, but let's not make losses. Let's not burn money. So let's remain profitable. If the margins right now are diluted, that's perfectly fine. We can scale them up at a certain level. I think over the next 2-3 years, what you will see is as esports becomes a top spectator sport in our country, you will see the media rights around these properties and around the esports tournaments significantly increase in value. And I think a lot of that will flow into the bottom line. So we are very hopeful that these single-digit margins over the next 3 years, become larger. Very difficult to estimate what they will be today, but that's what we are working towards.
Okay, let's talk about AdTech, which is the third biggest vertical for you. What is your take here? Global AdTech is $700 billion business. How much is Dataworks here, and what kind of growth rates are you looking at?
So Dataworks for us has grown over 50% year on year. So it's on its own self is growing at a very rapid clip, and we are very happy because again, it's a profitable company generating good EBITDA margins and generating its own cash flows, and those are the type of businesses we really like to operate. Now on Dataworks, it's a little bit under $20 million run rate business. Like you yourself said, the AdTech business is so large that there's a huge room for Dataworks to grow within its own business that it operates today. But there are also multiple levels of synergies with the entire Nazara gaming ecosystem. AdTech becomes important for gaming in multiple places, including monetization of games, including user acquisition, including first-party data of users. So I think there are multiple levels that we are integrating with Dataworks. So we see Dataworks continue to grow strongly on a standalone business, as well as creating a lot of value accretion for us through synergies with the entire Nazara network.
Okay, Nitish, just hang on to that. Well, Sonal, let's talk about the financials of the company. Now, new age companies have been known to be loss-making. What's it for Nazara?
Okay, it has been profit-making for a long time. Growth has been decent as well in the business. In 9 months of FY23, companies' revenues are more than that of FY22. And they've been focusing more on revenue growth. Margins, they have been under pressure in 9 months at 10%, which compares with 15% in FY22, which is led by higher OPEX and investments. 9 months PAT is almost equal to FY22 PAT, or maybe a slightly higher. Now, let's talk about balance sheet, because cash in the books of the company is at 660 crore rupees. And this is something which gives comfort to investors as well. So, Nitish, let me ask about the growth plans for you. How much will you actually be growing by from here on, and what is the margin outlook for you?
I think 20-25% should be the minimum growth case for us year on year. Hopefully, we will achieve much better than that. I think you need to look at a larger picture that where is gaming in our country today, and where it could be 5-7 years down the line. I think if you look at that picture and look at where Nazara is, right, through a diversified portfolio of products, IPs, businesses, market leadership, and key markets in the gaming like esports, key emerging trends, I would say, like esports. All of our businesses are cash flow generating. We have a very strong DNA to generate tangible cash flows, be profitable. I think if you overlap this with the overall tailwinds in the gaming industry, I think we are only getting started. Also, Nazara has a history of over 2 decades, which means that we have the ability to persevere, to pivot in a fast changing environment, and gaming is based on technology which changes very fast. I think we have the fantastic DNA and experience to take advantage of these opportunities. So I'm very hopeful that we will bring it all together to ensure that we can continue to deliver fast growth, which is driven alongside profitability.
Let's focus on your revenue mix then. You get close to around 40% of revenues from India, 60% is exports. Will this continue, or will there be a bit of a change out there in terms of revenue mix?
We see both segments continue to grow for us aggressively. At some point of time, I think the Indian revenues will significantly accelerate as the propensity to pay in India increases much more. The consumption is already very high. So I think there will be a catch-up that India may grow. If you were to zoom out 5 years, perhaps India revenues could be majority for us. But at this point of time, we are aggressively growing both Indian revenues and global revenues. It also helps us, again, from a diversification basis. Some of the products, it helps us to launch products in the US market where we can get the monetization right. We can compete with the best in global markets, and get a product right over there, and then bring it to India. We are doing it with products like Kiddopia, and I think that will be also very successful in India. So I think over a period of time, India revenues may surge ahead of global revenues, but at this point of time, in the next year or two, I think you will still see both revenues grow strongly.
Well, you're known to be a company that makes a lot of acquisitions. So what is the process in terms of strategic acquisitions? How does the management decide which company to invest in and the typical process around it?
We have a framework internally, but we continue to be an investor who wants to buy, if I were to quote the classic Buffett theory, right? Buy a good company at the right price. We are a value investor. If you've seen most of our deals in the past, we have not got carried away with FOMO because especially in tech world, many times a lot of exciting things happen and you can get carried away by the FOMO. We are very careful about that. We like to buy the right business at the right value. We bought Animal Jam, the WildWorks company, a few months back at a 1x of revenue. We thought it was a fantastic deal for us and a great IP with a very passionate community, which we can really scale. So that's how we think about it. We prefer to buy businesses that are not burning a lot of cash because in our DNA is to, run profitable, tangible, cash flow generating businesses. So we don't go very much out of a comfort zone to buy businesses that are burning a lot of cash. But if it's a small burn towards the right objective, then we don't mind it. And we once we buy these businesses, we focus very hard on how to make them profitable and cash flow generating very quickly. So that's how we think about it. In the current environment is a fantastic environment with markets down, kind of a funding winter around with startups, struggling to raise capital. I think Nazara could be a great partner to many startups in the gaming and adjacent spaces. And also we could get very good opportunities ourselves. So we are very actively working on, new opportunities in this space.
Well, Nitish, Sonal just mentioned that one factor that gives some comfort is the cash in books. So what are the plans with regard to this cash in the books? How much of it is with SVB or any US, European banks? Also, will you look at paying out dividends?
The SVB issue is sorted for us. We had 64 crore rupees stuck in SVB, but we were able to salvage all of that. So I think that's in the past for us. In terms of dividends, sure, at some point of time we would love to, but we think capital redeployed for growth and investments today is the best use of the shareholder capital. So I think in the near future we will continue to do that. And in terms of a cash, we have over 600 crores of cash with us, and we will continue to deploy it into attractive investments. The company itself generates positive cash flows, so we do not need cash flows to fund our day-to-day operations. So most of the capital will either get deployed into organic growth or into acquisitions.
Okay, I was looking at the company structure. You do have a lot of subsidiaries. So will you look at restructuring of any sorts, make the structure simpler? Will you raise capital in any of your subsidiaries?
We may definitely raise capital in some of our subsidiaries. The advantage of today's structure is we have a lot of optionality and gives us a lot of flexibility within each of our businesses to structure how we can. Of course, if you delve very deep into our structure, it does look complicated. But if you zoom out and just look at what is Nazara's philosophy, DNA, and approach to the gaming ecosystem, things will look a lot more simpler.
Okay, final question then, Sonal. Tell us about the shareholding pattern. Some big names are there, I believe. And also, as always, what about valuations? Okay,
so the promoter holding in this company, it is now low at 19%. But this is supported by big institutional holdings, Nigel. Mutual funds hold 5%. Insurance companies, they hold around 1.05% stake. Rekha Rakesh Jhunjhunwala at 10%. Foreign companies have 4.19% stake in the company. Bodies Corporate at 11.3%. So some big names supporting the stock movement as well. Valuations, they are not very cheap. Even after the big fall that we've seen, it trades at 44.7 times one-year forward earnings.
Okay, all right, Sonal. Thanks so much for telling us about that. And thank you, Nitish, as well, for joining in and giving us details of the company. But it's time to slip into a short break. We'll come back with another interesting stock. CSB Bank is the stock on our Spotlight segment.